Now look at the chart. Walmart peaked around $133 to $134 earlier this year, and since then the stock has been making lower highs and lower lows. This earnings reaction pushed WMT down toward $103, with extremely heavy volume. And that volume matters. When a stock breaks important support with unusually large volume, you have to respect the selling pressure until price proves otherwise. The most important area right now is roughly $102 to $104. This is a major decision zone. If Walmart can stabilize here, absorb the selling, and then reclaim approximately $108 to $110, that would be the first sign buyers are returning. Above that, I'm watching $114 to $116. That area has repeatedly acted as support and resistance. A strong move back above it would significantly improve the chart. But if WMT loses $102 decisively, the psychological $100 level becomes extremely important. Below $100, the next major area I would watch is roughly $95 to $97. So right now, don't assume Walmart is cheap simply because it dropped 9%. Watch the reaction. And this is also where the difference between trading and gambling becomes important. A trader knows the level they're watching, what confirms the setup, and exactly what proves them wrong before putting money at risk. If you want my free guide on what separates a trader from a gambler, I've linked it below. Now back to Walmart. Hold $102 to $104 and reclaim $110. The stock starts repairing the damage. Lose $100 on heavy volume. Sellers are still in control. The earnings numbers were stronger than the stock reaction suggests, but the market is looking forward, not backward. And right now, Walmart needs to prove that buyers are willing to defend this critical $100 to $104 zone.